Good afternoon, everyone. It's my pleasure to welcome you at Ignitis Group 2022 earnings call. Today, our management will introduce you with the key highlights of 2022 strategic and financial performance, as well as the guidance for the upcoming year. After the presentation, a Q&A session will be held. We encourage you to take the opportunity and ask questions you might have. With that, I pass the word to the Group CEO, Darius Maikštėnas.
Welcome all to our 2022 full year results presentation. Let me begin with the highlights of the year. 2022 was marked with both strong financial and performance results, dominated by green generation segment. Despite the challenging and ever-changing environment of energy sector, our year-on-year adjusted EBITDA grew by 41.1%, reaching 469.3 million euros, and surpassed the higher end of full year guidance range of 420 to 460 million euros by 2%. Robust result was mainly driven by green generation segment performance, which year-over-year adjusted EBITDA increased more than twice to 252.4 million euros and accounted for more than a half of group's total result. This was mainly a result of launch of Pomerania wind farm in Poland and better results of our operating assets. Supported by increasing renewable segment result, we continue to commit to our dividend policy. Hence, for 2022, we expect to pay 1.248 euros dividend per share, which represents a dividend yield of 6.6%. Additionally, the group believes that the war in Ukraine was the main cause of price volatility, which turned into additional profits earned by energy sector companies last year. And we feel the moral obligation to share part of this profit with Ukrainian people. Therefore, subject to decision of the AGM, we plan to allocate 12 million euros or around 10% out of the total group's additional profit earned in 2020 from green generation as aid for recovery and reconstruction of Ukraine's energy infrastructure. All the remaining additional profit of 102.2 million euros, as committed in Q4 2022, will be directed into building new energy infrastructure in Lithuania to contribute to ensuring Lithuanian energy security and green transition. Also, as expected during Q4 2022, the group's net working capital, net debt, and in turn leverage metrics have stabilized. This was mainly the outcome of normalized price levels and recovered temporary regulatory differences. However, customers and solutions segment had a challenging year, especially on a loss-making electricity B2C, which made minus 23.2 million euros. Moreover, year was also marked with the record high investments made, which more than doubled and reached 521.8 million. Again, primarily as the result of investments made in green projects. Our investment growth was supported by our green generation portfolio capacity additions, which since the beginning of 2022 more than doubled to 5.3 gigawatts, mainly driven by greenfield project additions. When it comes to sustainability in our organization, we take a holistic approach that involves all levels and all functions. In 2022, we focused primarily on a few areas which include safety and health at work, employee mental health and well-being, and of course, decarbonization of group's operations. Our ESG ratings reflect our work in these areas throughout the whole organization, placing the group among the ESG leaders in our home markets. Let me now cover each of the 2022 highlights separately. Again, we exceeded our full year adjusted EBITDA guidance of 420 to 460 million as a result of better green generation segment results thanks to higher spreads between peak and off-peak market prices, more favorable clean spark spread supporting our flexible generation activities. However, our positive result was partly offset by loss-making customers and solutions B2C electricity result. This all brought the group's adjusted EBITDA to the level of 469.3 million euros, marking a top guidance range exceed by 2%. Moving on our strategic performance, it is again marked with the significant progress achieved in the development of our green generation business segment. Since the beginning of 2022, our renewables portfolio increased more than twofold to 5.3 gigawatts. Our project pipeline more than tripled to 4.1 gigawatts, with the largest share of growth captured by accelerated greenfield project capacity additions. In total, our greenfield pipeline increased more than 11 times to around 2 gigawatts. On top of the greenfield growth, our pipeline also increased because of 4 acquisitions across early and advanced development stages, out of which Silesia Wind Farm 2 in Poland already reached the construction phase. In terms of our pipeline split by technology, the largest share continues to conclude onshore wind and solar development projects. And regarding the geography, the largest share of projects is settled in Lithuania, followed by Latvia and Poland. Looking at the project implementation on the project-by-project basis, it is progressing as planned with few exceptions since our last 9 months 2022 results presentation in November. Our targets to generate the first energy on testing mode around Q1 2023 and commence full commercial operation of Vilnius HPE biomass unit in Lithuania during the next heating season remain unchanged. However, due to disruptions in supply chain and construction markets, there is a minor delay in project COD, which is postponed by 3 months to Q3 2023. Also, regarding our Silesia Wind Farm 1 project under construction in Poland, we expect to supply the first power to the grid as planned in Q4 2023. However, due to some constraints in supply chain as well as weather risk challenges, the project budget was revised from around 70 million euros to around 75 million euros. And COD postponed again by 3 months to Q1 of 2024. There were no significant changes in implementation of other projects. Next, let me cover our ESG initiatives and recognition supporting our progress made. During 2022, we remained committed to all our environmental, social, and governance targets. This year, we explicitly focused on health and safety, mental health and well-being, as well as the ensurance of our SBTi-approved targets achievement, as we are committed to halve our greenhouse gas emissions by 2030. Hence, the climate-related issues took at the center stage as development of green generation is being accelerated, which is essential to achieving our decarbonization targets. Our Scope 1 and Scope 2 emissions decreased in 2022. However, when compared to 2021, our total emissions have increased primarily due to an increase in Scope 3 emissions from energy supply activities. We continue to view ensuring the reliability of supply as critical role. As well, we therefore look for ways to reduce our emissions while fulfilling this responsibility. 2022 marks how consistent progress in daily actions led us to sustainability excellence. The group received a score of A- from CDP by disclosing actions on climate change, meaning we are among the highest scoring companies in the Central and Eastern Europe. The leadership score is an acknowledgement and at the same time an obligation to continue the same practice in environmental disclosure and performance. EcoVadis awarded our customers and solutions company with platinum medal, meaning Ignitis being in the top 3% of companies rated by EcoVadis in the electricity, gas, steam and air conditioning supply industry. Finally, the group has also received its first ISS ESG rating scoring C medium in performance scale, while other ratings remain at the same high score level. Understanding the importance of being rated through the different sustainability lenses, we will do our best to maintain highest rating scores or improve them further. Let's move on to each segment performance over the last year. I will begin with our core green generation business segment performance. The segment year-on-year adjusted EBITDA more than doubled from 107.5 million euros to 252.4 million euros. Its outstanding performance was mainly driven by the launch of Pomerania wind farm in Poland and high electricity prices supporting our operational assets activities. With regards to secured capacity, it increased by 218 megawatts as the result of launch of construction of 3 projects. Silesia wind farm portfolio consisting of 2 projects and Polish solar portfolio 2. Extensive expansion across our home markets led to our investments increase by more than 7 times comparing to 2022, reaching the level of 252.4 million euros. It was driven by investments made in onshore wind farms, both in Lithuania and Poland, and Vilnius HP biomass unit. Regarding our second core business segment, networks, the segment year-on-year adjusted EBITDA increased by 13.1% to 164.5 million euros, mainly due to the introduction of additional tariff component in the new regulatory period, which started in 2022. In addition, networks investments grew by 40.2% to 268.1 million euros. The increase was driven by investments made in the electricity distribution grid as a result of increased contractor fees, smart meter rollout, and higher level of new connections and upgrades. Looking at the operational metrics, we continue to capture decrease in distributed volumes as the result of higher natural gas prices, which led to a decrease in consumption. And as the result of extreme weather conditions, natural disasters, as well as strong winds and storms, our quality indicator SAIFI was negatively affected. Despite that, SAIDI indicator improved as the result of increased number of installed automatic solutions and staff management based on the weather forecast. Finally, we successfully continued the mass rollout of smart meters, which was launched in July 2022. Our target to install 1.2 million of meters by the end of 2025 remains unchanged. Contrary to increasing results captured in our 2 core green generation and network business segments, our flexible generation result decreased. Lower adjusted EBITDA was a result of lower levels in regulatory and commercial activities and was partly offset by a more favorable clean spark spread in Q4 2022. These effects are reflected in our year-on-year adjusted EBITDA performance, which decreased by 7% to 34.6 million euros and significant drop of 66.9% in the net electricity volumes generated. Also, let me remind once again that considering our geopolitical uncertainty nature, gas reserve of 1.1 terawatt-hour has been acquired, causing a temporary increase in working capital level. Finally, on the positive note, for the first time we won a Polish capacity mechanism auction in 2027 will ensure 2050 megawatts availability. Similarly to flexible generation, we captured a negative trend in our customers and solutions business segment result, which was mostly affected because of undergoing energy crisis across the globe. For customers and solutions segment, it was a challenging year, which is reflected by year-on-year adjusted EBITDA significant drop by 61.6%, which was driven by loss-making electricity activities and partly offset by positive results from utilizing Lithuania LNG terminal and securing profitable one-off deals with foreign B2B customers. Regarding the net working capital need, it has stabilized during Q4 of 2022 and compared to 9 months of 2022 decreased twice to 446.6 million euros as a result of recovered temporary regulatory differences and active management actions taken. Despite the above, we continue to maintain the majority of the regulated market share. Given the energy price volatility during 2022, different support schemes across countries were applied to support the customers. On slide number 17, we provide you with an overview of state measures applied in Lithuania, providing customers with partial compensation due to increasing prices and its impact to the group. Over the course of 2022, as well as post-reporting period, increasing prices as well as regulatory differences have been partially compensated. For 2022, the state, for this purpose, dedicated the amount of up to 1.2 billion euros, and for 2023, currently up to 1 billion euros is planned for support measures. Overall, it had a positive impact on group's net working capital, net debt, and in turn, leverage metrics. With this business review of 2022, I'm giving the floor to the group's CFO, Jonas Rimavičius, to continue financial part in depth.
Thank you, Darius. We have delivered strong financial results in 2022. Our adjusted EBITDA grew by 41.4% and reached 469.3 million euros. The robust result was driven by green generation segment, which adjusted EBITDA more than doubled and reached 252.4 million euros. Green generation segment now accounts for more than half, or 53.8% of total group result. The main drivers behind this growth were better results of our operating green generation assets, mainly due to higher electricity market prices and launch of Pomerania wind farm in Poland. Moving on to the network segment, we recorded 13.1% year-on-year growth in adjusted EBITDA, mainly due to newly introduced additional tariff component of 28 million euros and higher regulated asset base. In flexible generation segment, we saw a 7% decrease, mainly due to lower volumes generated. The last segment, customers and solutions, faced a challenging year, which is reflected in a 25 million euros decrease in adjusted EBITDA year-on-year. Lower result was primarily driven by loss made in electricity activities. The loss in electricity was partly offset by positive results in gas, mainly from utilizing Lithuania's LNG terminal and securing profitable one-off transactions with foreign B2B customers. Moving on to the return metrics. Growth of adjusted EBITDA was the main driver behind improved net profit, adjusted return on capital employed, and return on equity numbers. Adjusted net profit grew by 57.2% and reached 256 million euros. Adjusted return on capital employed increased from 7.9% to 10.7%, which remains well above our targeted levels of between 5.5 to 6.5%. And adjusted the return on equity increased from 8.9 to 12.9%. In 2022, we made record high investments and continued contributing to green transition and energy security in our region. Total investments reached 521.8 million euros and were more than 2 times higher compared to last year. The increase was mainly driven by the green generation segment as a result of investments in onshore wind farms in Lithuania and Poland, as well as Vilnius CHP biomass unit. Investments into networks also grew due to higher investments in electricity grid, driven by higher contractor fees and higher volume of works performed. Smart meter mass rollout, which we launched in July last year, also had a positive impact. Next, our net working capital and free cash flow figures. Decrease in energy price levels towards the end of the year and recovered temporary regulatory differences allowed us to normalize our net working capital level at the end of 2022. It has decreased by 58.5% since the end of Q3 and reached 443.3 million euros, returning back to the level seen at the end of 2021. As a result, due to the decrease in net working capital, our free cash flow has turned to positive 17.3 million euros for 2022. Moving on to the leverage metrics, net debt stood at 989.9 million euros at the end of 2022 and increased only marginally year on year. FFO to net debt improved from 31.3% to 49.1%, significantly above 23% threshold required by S&P for BBB+ credit rating. Net debt to adjusted EBITDA has decreased from 2.9 to 2.1 and remains substantially below 5 times threshold of our strategic plan. As presented in our Q3 results in November, the extreme situation in the energy market caused a significant increase in our net working capital levels, which exceeded 1 billion euros at the end of September 2022. To accommodate this, throughout the year, we have secured credit line agreements for more than 700 million euros. At the end of the year, though, as a result of decrease in energy price levels, as well as the recovered temporary regulatory differences, our liquidity reserves stood at around 1 billion euros, enough to cover all potential liquidity needs. Turning to our shareholder returns, we intend to pay dividends of 90.3 million euros for the year 2022, which represents growth of 3.1% and is fully in line with our dividend policy. This translates into dividend per share of 1.248 euro and a dividend yield of 6.6%. As Ignitis Group, we fully support the aim of EU taxonomy regulation. Hence, we have done an extensive taxonomy alignment analysis of the group's activities, which allowed us to identify 14 taxonomy eligible activities listed in the delegated acts. Later, it was confirmed that 10 of them are taxonomy aligned for the 2 environmental objectives: climate change mitigation and climate change adaptation. We have disclosed 4 KPIs of these taxonomy aligned activities. In 2022, 74.6% of our adjusted EBITDA, 89.5% of taxonomy capex, 64.9% of taxonomy opex, and 20.6% of revenue were taxonomy aligned. Finally, our guidance for 2023. This year, we expect our adjusted EBITDA to be in the range of 430 to 480 million euros. Our largest segment, green generation, is expected to be lower compared to 2022. The main driver for that is lower forecasted average price of electricity generated. However, negative effect from electricity prices is expected to be partially offset by new asset launches, including Mažeikiai Wind Farm and Vilnius CHP biomass unit, as well as the implementation of asset rotation program. In the network segment, we expect growth due to continued investment program and in turn higher RAB value. Similarly, growth is expected in customers and solutions segment, driven by improvement of electricity supply result, which was negative in 2022. Finally, flexible generation business segment is expected to remain stable. With that, I pass the word back to Darius to conclude our results presentation.
Thank you, Jonas. Let me conclude our earnings call by highlighting the key takeaways of Ignitis Group performance in 2022. Ignitis Group adjusted EBITDA reached 469.3 million euros and was driven by green generation twofold increase due to the launch of Pomerania Wind Farm in Poland and better performance of our operating assets. This segment's adjusted EBITDA amounted to 252.4 million euros and accounted for more than half of the group's total result. In turn, it primarily led to our top of the 2022 guidance range, exceed by 2%. Hence, we continue committing to our dividend policy, and for 2022 we expect to pay a dividend of 1.248 euros per share, corresponding to a 6.6% in dividend yield. Together with proposed dividend for the second half of 2022, we also proposed to our AGM to agree on the allocation of 12 million euros as aid for recovery and reconstruction of Ukraine's energy infrastructure. This amount concludes around 10% of 114.2 million euros, which is additional profit earned in 2022 from green generation. The remaining proportion, or 102.2 million euros, as committed the last November, will be directed into building new energy infrastructure in Lithuania to contribute to ensuring Lithuania's energy security and green transition. Moving on, as a result of normalized price levels at 2022 year and as well as recovery temporary regulatory differences, our net debt level and leverage metrics have stabilized compared to 9 months of 2022 reported figures. In addition, we made record high investments, which more than doubled and reached 521.8 million euros, primarily as a result of investments made in green generation projects. Regarding the strategic performance of the group, since the beginning of 2022, we witnessed a substantial green generation segment development. This is reflected in our more than doubled portfolio increase, which is now amounts to around 5.3 gigawatts. Also, focus on sustainability matters throughout the year was reflected in the upgrade and additions of ESG ratings, placing Ignitis Group among ESG leaders in our home markets. And lastly, in terms of 2023 performance, we expect our adjusted EBITDA to be in a range of 430 to 480 million euros. So with that, thank you for staying with us, and we are ready for questions.
This concludes the management's presentation and opens the floor for the Q&A session. Operator, handing over to you.
Thank you, dear participants. As a reminder, if you wish to ask a question over the phone, please press star 11 on your telephone keypad and wait for your name to be announced. To withdraw your question, please press star 11 again. Alternatively, you can submit your questions via the webcast.
Thank you. We will begin with the questions received in advance. So the first question is, on 28th November 2022, you announced the start of coal testing in Vilnius CHP unit. Are the tests completed? What are their conclusions? When are you planning to start hot testing and generating first energy?
Coal testing of Vilnius CHP biomass unit is ongoing and will continue till the start of hot tests. which are expected to begin by the end of Q1 in 2023. Our targets to generate first energy on testing mode around Q1 2023 and commence full commercial operation of Vilnius CHP biomass unit during the next heating season remains unchanged.
The next question. Ignitis is also operating as a B2B supplier in Finland, which already has its first LNG terminal. Does Ignitis intend to take advantage of its know-how and utilize the Finnish terminal while supplying gas to Finnish or neighboring markets? Or maybe the opposite, the Finnish terminal and the emergence of new supply routes to Finland will mean the end of Ignitis supply activities in Finland.
Currently, we focus on development of green generation, which is our core business segment. Hence, we do not expect to expand our gas supply related activities.
The next question. You previously announced an asset rotation program and its launch around Q4 2022. However, we did not hear any news about a single successful transaction concluded by Ignitis Group. Does it mean that right now the environment is not favorable for the conclusion of such transactions?
Yeah, so in line with the market practice, we will communicate more details about the projects under asset rotation program once binding agreements are signed.
The next question. The commodity prices saw significant changes since the end of reporting period, year 2022. Maybe you have some estimates of the resulting decrease in the working capital needs after the reporting period. Can we expect that, regardless of the investments, the falling commodity prices and regulatory differences compensated from the state's budgets will result in a positive cash flow in 2023?
As you have just seen, our net working capital needs have already decreased significantly in Q4 to 443 million, down from more than 1 billion in Q3. So the major impact from price drop is already reflected. But yes, our goal is to decrease it to even lower levels. Unfortunately, I cannot disclose post-reporting figures. Q1 numbers will be disclosed with Q1 results in May. And regarding the cash flow guidance, as you have seen, we had a positive free cash flow of 17 million in 2022. However, we don't provide cash flow guidance for 2023. As previously, we provide only adjusted EBITDA guidance.
The next question is as following. How have the gas inventory write-down during Q4 and after the reporting period affected Ignitis results? That is, were the inventory price fluctuation hedged, or did you experience actual losses due to inventory write-downs after gas prices dropped?
Okay, so inventory write-down in Q4 should not be viewed in isolation. It should be analyzed together with the temporary positive impact coming from average cost accounting method. And when these two accounts are taken together, the result is a neutral effect to 2022 results. Inventory fluctuations are 90% plus hedged. However, due to accounting principles, the inventory and hedging effects fall in different periods. Hence, we see result fluctuations. Again, post-reporting figures will be disclosed with the announcement of our Q1 results in May.
The next question. Ignitis Group is actively preparing for the Lithuanian offshore wind farm 1 auction that will take place at the end of the year and is expecting to be successful. However, we are hearing less and less about the Lithuanian offshore wind farm 2, which has the same target capacity. Are you preparing to participate in the wind farm 2nd auction? When will the auction take place? Before or after the winner of Lithuanian onshore first auction is announced? If Ignitis Group wins the first auction, will you consider participating in the second one? Are there any possible synergies in winning both auctions?
Regarding the offshore project in Lithuania, which tender will be announced in spring, we actively preparing for the auction and will participate together with our partner Ocean Winds. And regarding offshore project in Lithuania, which tender will be announced in autumn, our participation will depend on the outcome of the spring's Lithuanian offshore wind project auction. If we are successful in the spring's tender, we will participate. If we are not successful in spring's tender, we will participate in autumn's tender. On the other hand, if we are successful in spring's tender, we will have already met the target, but we will evaluate our financial capacity to participate in the autumn tender.
The next question is as following. Mažeikiai wind farm, does it already have some signed PPAs for future production? What price level?
So the short answer is no. Mažeikiai currently does not yet have a PPA signed, but that is expected to be signed in the nearest future.
Our next question is, why the value of company is decreasing? One of the main objectives of the company is to increase value of the company and increase value of shareholder assets. But Ignitis Group does not perform this objective quite a long time. Why?
I will not go into too much detail answering this question, but I think there's a difference of concepts between share price and value. So in my view, we have been increasing shareholders' value, and it is evident in the results.
The next question is as following. Congrats on booming results. Could you please indicate what electricity price, or at least some magnitude, for drop does your guidance for 2023 imply?
So there are several factors in this. So one is of course the absolute decrease in the market price expected. So this is for us it's the same like for all other market participants. The other thing is that for 2022, our hedging level was around 50%, which meant that we benefited quite significantly from exposure to elevated market prices last year. For 2023, our hedging level is at 73%, which means that we have less exposure to the market prices, which means lower effective market price. However, it also means less exposure to fluctuations in the market.
The next question is, could you please provide some flavor on CapEx price development recently? Still sharply increasing or maybe slowing down? Thanks.
So I would say overall CapEx price trend has stabilized. We have seen around 50% increase in contractor fees in network segment, and in renewables, if as a proxy we would use onshore wind, the CapEx has increased by roughly 30% or so.
The next question is, and please provide flavor on asset rotation in 2023.
So as I have mentioned regarding asset rotation, we will communicate the results once binding agreements are signed.
Next question is as following. Could you please indicate how average electricity price is progressing in new PPA agreements?
So regarding the PPA trends, naturally, to some extent, they follow the current spot prices. So they have decreased somewhat from high 2022 H2 levels, but not to the full extent. So it is a downward trend, but not very significant.
Our next question. Does Ignitis plan to participate in the first Lithuanian offshore wind farm tender, which will start on 30 March?
Yes, as I explained before, we are actively preparing for the spring tender together with our partner Ocean Winds, and our participation in the second tender will depend on the outcome of the first tender and the further analysis of our financial capacity.
Currently, we have no further questions, so we'll be waiting for a few more minutes.
Dear participants, as a reminder, if you wish to ask a question over the phone, please press star 11 on your telephone keypad. Alternatively, you're more welcome to submit questions via the webcast.
As we have no further questions, we may conclude this presentation. Thank you all for joining us today. Should you have any questions, please do contact us. Thank you again and enjoy the rest of the day.